if you look at our big ideas 2025, you'll see that our bull case for Bitcoin in 2030 is closer to 1.5 million, still more than tenfold from where we are today. And our confidence has increased as the institutional interest has increased. However, I will tell you, we have an on-chain analytics expert, David Puel, who has 4 main indicators right now that are still pointing to a bull market. And we've just had a major breakout. I think many of the technicals were beginning to look a little iffy or shaky, and they have now been cleared. Those hurdles have been cleared. So we think that for the next year, that this bull market will remain intact.
Bitcoin has broken out, and every major on-chain signal is now flashing green for a potential surge to $1.5 million by 2030. That's the latest from ArkInvest CEO Cathie Wood. After weeks of hesitation, Bitcoin has finally cleared key technical hurdles, and the momentum feels genuine. The market is shifting from doubt to conviction as institutional interest quietly builds, with on-chain metrics aligning to signal a strong bull run. The outlook is turning increasingly bullish, and in a recent interview, Cathie Wood reaffirmed ArkInvest's bold prediction of $1.5 million per Bitcoin by 2030. She highlighted 4 on-chain indicators from David Powell, all confirming the bull market remains intact. With conviction returning and solid structural support beneath the price, the next phase of the cycle is already underway. Stick around until the end of the video as Cathie Wood breaks down why this breakout could mark the start of Bitcoin's biggest run yet. Cybercriminals are getting smarter, and everyday investors are the new target. You worked hard for your crypto. Don't lose it to a scam. Recently, attackers bribed offshore agents at major crypto platforms, stealing names, birth dates, even social security numbers. They drained real accounts in seconds. No blockchain hack, just human error. Once it's gone in crypto, it's gone. That's why ITrust Capital created the Premium Custody Account, the most secure way to protect your asset. It's a closed-loop system, meaning funds can only move between you and your account. Even if someone gained access, they can't steal your crypto. Backed by institutional-grade custody at no extra cost. Sleep easy knowing your investments are locked down. Click the link, use code DOSE7, and get a $100 funding bonus. Start protecting your future with ITrust Capital.
At the moment, we know that the first half of the year was characterized by a lot of turmoil emanating from the United States. Around tariffs and around geopolitical as well. And I think what's going on is the President Trump and his administration made the decision to get all of the tough work from their point of view, or the bad news from the market's point of view, out as soon as possible after they started the administration on January 20th. And so there's been, it's felt chaotic and on both sides, in the United States and elsewhere in the world. I think the objective was by this fall to have tariffs, the tax package, and lots of deregulation in place so that the economy and the stock market would take off as we enter the campaign season for the midterm elections next year. President Trump does not want to be a lame duck. And he knows that he's going to be judged on 2 things. He judges himself on 2 things: the economy and the stock market. And we believe the equity market's beginning to understand this and has been rising. We call it a wall of worry throughout all of the chaos. We've seen markets around the world rising with the expectation, we think, that the economy is going to move out of what has been a rolling recession here in the United States into a rolling recovery that will pick up momentum thanks to new technologies that are exploding today. I mean, the ChatGPT moment launched it, but will drive productivity. So very healthy, real growth and low inflation. That's probably the biggest surprise. Many people associate real growth with inflation, history would suggest otherwise. The stronger the growth, the higher the productivity, the lower the inflation. So we think we're heading into really good times.
What do you think are actually the biggest risks, but also biggest opportunities for investors right now for the next 12 to 24 months?
Yes, we know that AI is here, and it is, we do not believe it's hype. We believe it's a profound technological revolution that's taking place. And of course, many people, when many investors, when they included or when they thought about AI, their first response was in the chip sector, so NVIDIA, TSM. And we think they'll be fine stocks, but we think the bigger opportunities, meaning they're not as well understood, are in the embodied AI space. And by that we mean AI as it impacts the physical world. We think the biggest application of AI is in the autonomous mobility realm. Many people know that as robotaxis. And we think that is, during the next 5 to 10 years, that will scale to an $8 to $10 trillion opportunity globally for the entire ecosystem, with the biggest beneficiaries, the network providers, accounting for half of that, so $4 to $5 trillion in revenue from essentially nothing now. The biggest robotaxi network out there, we believe, will be Tesla. Now, it is not yet. Waymo really has that. I would say has that mantle. But we believe that Waymo's solution is too high cost, and that it will give way to Tesla's lower cost solution over time. We think that the autonomous opportunity will submit to natural geographic monopolies. We don't know who that will be in Europe or China. We know Pony AI and others are going for it, nor do we know what it will be in Japan. We know that Tesla would like to enter those markets, but in this world, it's winner take most. The company getting passengers from point A to point B the fastest, the safest, and the least expensively is probably going to win. So lots of markets are up for grabs there. So that's the first embodied AI opportunity. The second is in healthcare. We think that the most profound applications of AI during the next 5 to 10 years are going to be in healthcare. We see already that there are diagnostic tools, diagnostic tests that are able to identify and diagnose cancer in stage 1. We're seeing this in one of our private companies, Freenome, able to use blood tests to diagnose colorectal cancer in stage 1. We have other testing companies out there, Exact Sciences, Guardant Health, also in the run for that competition. We see research and discovery being transformed by AI. AI is going to shrink the time from conception to market to create a new drug from 13 years on average now to 8 years and ultimately 5 years, we believe. And what's been very gratifying here in the United States is the FDA, the top regulator, is aiming to help with that process. So it is blessing the use of AI in research and discovery. And we also think that the cost of discovering a new drug, including all the failures, will drop from $2.4 billion for one drug down to 600 million, which is going to transform healthcare. And then the third general category that we think is going to transform healthcare is curing disease. So the convergence of various sequencing technologies with artificial intelligence and new technologies like CRISPR gene editing and other gene therapies is already starting to cure diseases, sickle cell disease and beta thalassemia. So CRISPR Therapeutics has launched those two products, and they have already started generating revenues and curing people. So these are profound changes that we don't think investors have priced correctly into the market yet.
President Trump has set in motion a productivity-driven economic reset, but Cathie Wood believes investors haven't yet grasped what's coming next. According to Wood, the chaos earlier this year, from tariffs to regulatory changes, was a deliberate strategy by the Trump administration to tackle tough decisions up front and clear the path for strong growth ahead of election season. With deregulation and tax reforms now in place, Wood expects the next phase to be fueled by explosive productivity gains powered largely by artificial intelligence. She highlights innovations like autonomous vehicles, AI-driven diagnostics, and gene editing breakthroughs as trillion-dollar opportunities that markets have yet to fully price in. AI, she says, will reduce costs, speed up drug development, and create entirely new revenue streams. Right now, most investors remain focused on last cycle's winners, a costly mistake, Wood warns. The real potential lies in sectors where AI is rapidly advancing, but where the majority of investors have yet to recognize its impact.
What do you think right now about Bitcoin? Where are we standing, actually?
Yes, I think what is happening here, it started with the spot Bitcoin ETFs. We're very proud to have one of the largest here in the United States, ARKB. That began the institutionalization of Bitcoin, the Bitcoin market, and other crypto markets, other digital assets. And I think many people are now tuning into the arithmetic. I actually posted on X, math is math, and math is mathin'. And what that means is we're at right now roughly 21 million units or Bitcoin having been mined in history. And that number is only going up to 21 million. It cannot go beyond that. And so I think more people are doing the math and saying, oh my goodness, this is a new asset class. I, as an institution, don't have much exposure. Bitcoin has the most secure network, and it's taking advantage of three powerful revolutions. It's a technology revolution, really the next generation of the internet, putting the native currencies into the internet. The developers did not do this in the late 80s, early 90s when they were evolving the internet because they didn't know that finance and commerce would take place on the internet. So that's a revolution. It's a global rules-based monetary system. Really the first one since the U.S. closed the gold window in 1971. That's a very big idea. And it is a new asset class. And it's that last phenomenon or revolution that is beginning to take hold now because there's real scarcity value. 1 million more Bitcoin will be mined, and that's it. So scarcity value is scarcity value. And the most interesting thing about Bitcoin is after the halving last year, which means the supply growth of Bitcoin was cut in half to roughly 0.9% on average per year. That dropped the supply growth of Bitcoin below the long-term supply growth of gold. And a lot of people understand the scarcity value when it comes to gold. Bitcoin is going to become more scarce than gold because unlike gold, Bitcoin cannot respond to an increase in price and mine any more than is mathematically metered now. Gold, however, can respond to the increase in price that it has enjoyed. And we are seeing new mines opening up, the higher cost mines, to try and get more supply out. And I think people are beginning to understand this distinction when it comes to scarcity value.
Do you have a target or goal for Bitcoin for this year? I mean, we've already seen a very strong year. I mean, we got the crypto week ahead, which might do a little more. But you got any specific target for 2025?
So what I'd like first is to address the longer term target. So the number you mentioned, somewhere in the 2.4 to 2.9